All right, welcome back, everybody, to another episode here. And today we are going to go over everything pre-qualification for your loan. What is it? Why you need to do it? Why it's the most important step you'll take in your home buying journey? How long does it take? And what do you have to provide? All of your questions answered on pre-quals. And as usual, I have Dave Miller with me today. Hey, Dave.
Hey, Rich. Thanks for joining or having me join.
All right, man. Yeah, thanks for being here. So from the 30,000 foot view, very often I'll get a call from a client who wants to go shopping for a house. And one of my first questions to them is, hey, how did you find the pre-qual process? What was it like for you? And very often I find out they haven't gone and taken that step. They often call the realtor first. And that's great because your realtor can give you a recommendation to a trusted lender they've worked with for a long time, give you a high quality referral. But literally the very next step after that first conversation in your home buying journey is to get on the phone with the lender and get that pre-qualification done. And there's lots of reasons for that Dave and I will go through. But one of the things I always tell people, if you're not calling me, if you're out of our market and you're just calling another realtor, if you have a realtor who's willing to put you in the car without a pre-qualification done, you're probably working with the wrong realtor. Any realtor worth their salt, who's a veteran in this industry, won't take you and show you houses until you've had a pre-qualification done. From a personal standpoint, it's a safety thing. It's a vetting process where we can prove that you're a good, safe individual to get in a car and go out with us. Realtors have had some, unfortunately, safety issues with people. And also it's to protect you so that you know what you can actually go out and buy and shop for. The worst situation is we put you in the car, you haven't talked to Dave, and we find a beautiful house. And after you talk to Dave, you find out you can't afford that house or anything near it. And then nothing else compares after that. So that's those are kind of the 30,000 foot view reasons why we want to get this done way early in the process.
Yeah, Rich, that's a really good point. And this is the part of the process I really enjoy. I like talking to folks, and a lot of people don't even know where to start on the pre-qual process. In fact, I've had conversations with folks, and a 10-minute conversation, they'll say, okay, what does it really take now to get pre-approved? And I'm like, you just did it. It's not a super intense, exercise. Really, basically, the pre-qual is just the initial conversation, and it's really me just having a conversation with the potential buyer, asking them a lot of questions, really questions, about their credit qualifications. But I don't even start there. When I say credit, I'm talking income, I'm talking assets, I'm talking credit score. It's really just some general questions about the individual. So you're considering buying. What prompted you to decide to buy? Why is now the right time? And are you looking, to get pre-approved because you want to buy in the next, 1 to 3 months? Is it 6 months down the road? So whatever timeline, a year, whatever timeline that is, it's a great conversation to start with, because at some point, if you plan on buying a home, whether it's now or down the road, this is the first part of the process. And the sooner you do it, the better off you're going to be, because you'll know realistically where you're at, and you can uncover some potential pitfalls or some positive things that may encourage you to either start or wait before you start the home buying process.
Yeah, and that's a great point, that you're providing a valuable service before you even get any financial information. One of the things Dave's great about doing is talking through your life situation. And we may find some deal breakers or some reasons why it's not the right time for you and your family based on your situation or the market mechanics for somebody like you, that says maybe you ought to wait a little bit, or maybe you ought to take these steps. And sometimes we get to that point before we even gather the financial information. And so the value you're getting by working with trusted professionals is to get that input right off the bat. Somebody who's asking you a lot of questions, not trying to push you through a process and get to the point where you can go shopping right away. The goal isn't for you to go shopping for a house. The goal is to determine whether you should shop for a house right now and what the best price range and most comfortable price range for you to shop in a house is right now, so that we can get the right house for you and your family at the right price.
Yeah, that's correct, Rich. And you mentioned two things: is price range and comfort level. And so when I pre-approve someone, or let's, pre-qual, part of that conversation is, aside from understanding what their income is really, what are you comfortable with paying on the monthly basis? Have you thought about that? What do you rent for today? What is, Do you have, some folks have already kind of maybe ran some mortgage calculators and they have a general idea what their payment's going to be, whether that includes taxes and insurance or not is, 50-50 there. But oftentimes folks have a general idea, and more often than not, people will, I think, wish for a lower payment than what's realistic for their price range. And so this conversation's great. Just to really identify with, okay, now this is what you qualify for, but what are you really comfortable with paying? And that comfort level is usually a really low number that's usually lower than what the neighborhood they're looking for would justify. So after some conversation, that number tends to come up, more of a realistic number when it includes taxes and insurance and, what their trajectory of their income's going to look like over time. So again, and then, people are oftentimes, well, I don't want my credit ran, I don't want to ding my score. Running credit's the last thing that I do. It's usually a conversation. I've been doing this for, almost 25 years now. And when I have a conversation with someone, 99% of the time, I know whether they're going to be pre-qualified or not before I even run their credit. And oftentimes people have a general idea of how their credit is, but that's just the first part of the process of the pre-qual. Let's just have a conversation, see what you qualify for, see if you're within the ballpark. And one of the questions I also ask is, if you're considering looking for homes, what area have you considered looking? And do you know what price point those homes are? Because that just gives us a starting point.
Yeah.
Rich, and I know we've talked about this a lot, is, people oftentimes are pre-approved or pre-qualified in a range. And that range could be really on the low end of their comfort level to the high end of the comfort level. And that could be, 50,000, 100,000 in purchase price. And, based on where you typically are showing properties, Rich, like the difference between 50,000, maybe you can extrapolate a little bit on that quality of house, quality of neighborhood. It's a big difference, right?
Yeah, and it just depends on where you're shopping, right? If you're shopping in like the greater Sacramento area where the median home price is $516,000 and you take a $50,000 to $100,000 swing, yeah, that's a huge jump in neighborhood or in fit and finish quality of the home or in square footage, depending on which compromises you're willing to make. Now, if you're shopping in El Dorado Hills with a median home price around $985, 50,000 isn't much of a swing, right? That's maybe some nicer granite in the kitchen in that area. So it just depends on where you're looking. And that's where, based on your pre-qualification range and then your comfort within that range, Dave and I can help give you a sense of what you can get in the different neighborhoods so you can choose your own adventure in that regard. But I'm really glad you brought up online loan calculators. I have a lot of videos where I walk you guys through this. You can check out on the channel on how to use these and sort of the problems with them, but I think it's worth addressing now. You might have gone through this when you were a kid. Dave and I are older, so for us, it would have been the late 80s. And, Toyota's got the cool Marty McFly, Back to the Future pickup down there, and they advertised one of them for, back then, maybe it was $8,000 or $9,000. And you're thinking, whoa, I got to go down. I'm going to get this truck. And I remember my dad sitting me down and saying, they've got one, if they even have one at that price, and the rest are way, way more expensive. And it takes one trip down to the dealership to find out you actually can't afford any of the trucks they've got down there when you're a 16-year-old kid. And those online loan calculators can walk you down that same path. Very often someone comes to me and says, I can afford like $750, but they don't know that they need to be accounting for about 1.25% in taxes into their mortgage payment. And in one of the area, well, two really, El Dorado and parts of Placer County where Dave and I work, the fire insurance can be really high. So those online loan calculators might have a national average of $90 or $100 in there, where in Placerville you might have $500 a month in there for your monthly insurance, housing insurance cost. So, you can go from I qualify for $750 to I qualify for $550 in a heartbeat just by not properly accounting for those taxes and insurance. Hard to keep track of all that yourself. And that's why just reach out to us. We can give you accurate numbers for the neighborhoods and the areas you're looking at, give you real payment ranges so you can really start deciding if what you can get for your money now is something that's worth you making the leap now.
Yeah, good point, Rich. And I think, I've been doing this for 25 years. I've never pre-qualified or pre-approved someone that couldn't actually buy a home in the price range that they were looking for. And so I think that's really important to set proper expectations. And there's, and I've I mentioned I've never pre-approved someone I couldn't get a loan for a mortgage, and every year it happens to me. It just happened to me this week. Actually, I had someone contact me to see what my interest rate was. What's my interest rate? I already shopped. I already got an interest rate. I just wanted to reach out to you. A friend recommended I give you a call. Unfortunately, I wasn't part of their pre-approval process yet. And I said, okay, great. I'm happy to quote you an interest rate. You're in contract. Let me ask you a few questions. Well, by the time I was done asking some questions without even running his credit, he didn't qualify for the house he was in contract for. So he was issued a pre-approval letter, spent time, went and looked at a property, and was not even qualified for that. So
it's brutal.
Yeah, it's brutal. And so it's not, like I said, it's not a cumbersome process to get pre-qualified and then pre-approved. And I'll talk about the difference. When I talk about pre-qual, it's really us having a conversation, general understanding. Doesn't mean I'm running your credit. Let's get a starting point, tell you what you qualify for based on different price ranges. And part of that pre-qual process, transitioning to the pre-approval process, is, as I mentioned, is really discovery and understanding more about you. Maybe if you're buying the home with a significant other or whoever that might be that you're purchasing the home with or not purchasing the home with, what is their income? What does their debt look like? What's their credit score look like? I never assume anything, because sometimes, I can pre-approve someone and be like, oh, sorry, you're not going to qualify for that $500,000 purchase price, But I always ask the question, do you have the ability to receive gift funds? I mean, separate conversations that we could have. Do you have the ability to have a co-signer? And there's some times where I talk to people and they say, oh, no, that's not me. My family's not in a situation, or friends or family, to gift me money or co-sign. That's okay. But I will still ask the question, because what we want to do is uncover and understand all possible scenarios that would work for each unique individual that comes to me to get pre-qualified for.
Yeah, and I think it's important too to just clarify. When Dave says he's never pre-approved someone who couldn't get the loan, that's a different level of the process. So it doesn't mean everybody who's ever called him qualified for a loan. So that pre-qual process, plenty of people call us all the time who aren't ready yet, or have some flaws in their credit, or their savings aren't up to par, or after talking to us, they sort of self-determine that what they can get, what they can afford, isn't what they want, and they want to wait a little while. So not that everybody who calls us can get a loan. That pre-qual process, that first call, kind of weeds all of that out for people and helps them self-select. So that's step one, right? You've called your realtor. They've asked you, you haven't gotten pre-qualified. You called your lender. Dave has gone through that first conversation and said, okay, you look like you probably will qualify. We take you to the next level, which is pre-approval. That's when we're starting to verify and collect assets and debts. And once you're through that process, if your lender's done their due diligence properly, there should be no fatal flaws in you being able to get a loan. So when he says, I've never pre-approved someone who couldn't get a loan, that means once I've done my due diligence, I've never had someone fail out of the process at that point.
Yeah, that's correct, Rich. Good point. And the only thing, once you're pre-approved, whether it's a pre-approval and we'll get into formally approved, the property is the last kind of piece of this. You haven't, property address to be determined does the property have any issues that would prevent you from qualifying? Disposition of the property, and we would talk through all that, and that rarely happens as well. But it's really important to know, once you're pre-approved, it's with property address to be determined. So,
and you're only going to that extent if you've already cleared those other hurdles. So step one, the pre-qual really requires nothing but a phone call, and it requires you only providing off the top of your head asset and income information, back of the napkin math type stuff.
Yes. So that initial call, I'm not asking for documentation, don't be, feel like this is like I said, a cumbersome process. And then once we get to the pre-approval process, where we actually validate some of your information, that's just, I will run your credit, takes minutes. And then usually in that scenario, gather like a pay stub and a W-2 and potentially a bank statement. Those are the types of things that, and oftentimes, with today's technology, you snap a photo of it with your phone and shoot it over. And now I have access to that information. And I can tell right away by looking at doing some calculations. And then the next step in that process would be for me to forward that information to an underwriter, especially if you're kind of on on the line of qualifying, always want to get it validated by an underwriter. And that's,
Now, when you say
again,
you're, oh, sorry, go ahead.
no, go ahead, Rich. No,
When you say you're collecting, maybe a pay stub, maybe a bank statement, I know there's a point at which we're going to need, 2 pay stubs, 2 bank statements. So at
yep.
pre-approval, do you just need the one? And then when you're going to send everything to underwriting to get fully approved, is that when you're gathering the second one, or do you do that later in the process? At what point do they really need to have what for you?
And it's always different based on the individual, how they're paid, how often they're paid. Are they salaried? Are they hourly? Are they self-employed? Do we need tax returns? Do we not need tax returns? So there's all kinds of variables that come into play here. So if you're just a W-2 employee and you're hourly and you've been on your job for a certain amount of time, or you're salaried, it's usually and it also depends on where we're at in the year as well when I collect a pay stub. So, we're in November. If I collect the pay stub, 99% of the time it's going to have your year-to-date income. So that's pretty easy for us to figure out. And even if you change jobs in the previous year, or your W-2 is different than this year, we have enough in this year to just look at your pay stub and know, without even necessarily looking at the W-2. So there's a lot of moving parts. And part of my conversation with a potential buyer or buyers uncovers all this stuff in the conversation. It's kind of naturally, really. It's not like you kind of don't even know that I'm just through years of doing this, asking these questions. I already know, as we're having conversations, what I'm going to need to collect. Because I ask you, how long have you been on your job? How are you paid? Are you hourly? Are you salaried? Are you self-employed? How long have you been self-employed? Are you an S corp? Are you sole proprietor? So, this business, there's a lot of complexities behind the scenes. And on this video here, Rich, we can talk and, scare people away, but it's not, everyone's different. And I am pretty versed in understanding their unique scenarios, and very quickly as part of the pre-qual process, and then move into the pre-approval process.
Yeah. So again, pre-qual, you really don't need anything. Pre-approval, you might be providing a bank statement, a W-2, not W-2, a pay stub, that sort of information for Dave to take back and process. And then and if you are a bread and butter, I W-2, I've got years of income and everything, that might be as much as they need. But we deal with people who go all the way up to, you might own a corporation, you might be taking all your income through dividend income, or, taking it on a K-1 type of thing. Mm-hmm. It gets very complex, like Dave said, and you guys don't have to worry about that. You bring us your situation and we parse that out for you, which is why it's important to take that next step. So up through pre-approval, you've dealt with me, you've dealt with Dave on a couple of phone calls, he's gathered some information. And then what we really want to do, the gold standard to get you ready so that we're in the best position to write offers and win offers to buy your home of choice, is to get you fully pre-approved property address to be determined. Like Dave said, that goes through an underwriter. So now we have a third party eyeballs on the situation. And that underwriter is one who's going to say, you know what, for you, we need a second pay stub. For you, we need another month or 2 of bank statements. Or for you, maybe you're getting corporate income and we need to take this to a whole different lender and see what they want because you've got a unique situation.
Yeah, it's a really good point, Rich. And so when we're looking at that pre-approval with the property address to be determined, it's looked at by an underwriter, and that gives you, again, we can get into the real estate side of this, but it gives you a competitive advantage when Rich is submitting an offer for you. And, so if you just, there's 2 things that happen is when you write an offer and Rich submits an offer, or whatever realtor you're working with, if you're not in this market, that's going to be accompanied by a pre-approval letter by the lender or your lender. So if I'm the lender and I issue a pre-approval letter, the first thing I'm going to do is, after Rich has submitted the offer, is place a phone call to the listing agent and really just share the buyer that I've been working with, their qualifications. And I do this 100% of the time. And surprisingly, that I talk to agents when I make that call. This doesn't happen all the time. And it's a really easy process. But not only do I share your qualifications, but if I explain it's already been looked at by an underwriter, it's just has to do with the property, that's almost as good as cash as a buyer. That just takes a lot of risk out of the equation for the listing agent and the seller.
Yeah, and that's a really important point for those of you who just lived through the COVID market insanity where, you were having to compromise all of your contingencies and write really fast timelines and all of that. A lot of you experienced getting beat over and over and over again in an offer situation by cash offers. And one of the main reasons for that is there's no risk of the loan falling apart and they can do things really quickly. So doing the upfront work, and a lot of lenders don't want to get you all the way
Mhm.
pre-approved, a property address to be determined, because now they've committed a lot of time, effort, energy, and resources. And if you blow out of the process, that was kind of a waste for them. And again, it's a really good qualifying criteria for you. And we'll do a whole nother video on how to pick a lender. But if you say, I want to be pre-approved all the way, property address to be determined, the lender says, no, let's just do the pre-qual for now. It's a good sign you're working with the wrong, guy or girl in the lending sphere, because they just don't want to put in the effort that will help you be in the best stead to make an offer. Generally speaking, in escrow is about 30 days. And the only real reason for that is the loan. We can get through everything else in 17 days or less, usually in 10 days or less in terms of all your inspections and reviewing paperwork and everything else. The rest of it is really for the loan. So by doing this upfront work to get you all the way through pre-approved property address to be determined, we can shave that down to, easy all day long, 25 days, very often 20 days. And in a couple of emergencies where someone's come from another real estate team that really messed this all up, we've closed some in 17, 18 days, really hustling for somebody. But that's about the quickest you can do it with a loan involved. And everything we do on the front end shaves days off of that. And if you're up against another person who's just a pre-qual letter, then that seller and their agent know they haven't gone through the process. Their information hasn't been verified, and it's going to take them longer to close. So they're a riskier borrower and it's going to take longer. I'm going to pick the less risky borrower who can close quicker so I can get my money and go. So it gives you a distinct competitive advantage. And even though the market is cooled, we are still a slight advantage seller's market, and we're still seeing 30 to 40% of our homes get multiple offers. I just did one in Rosemont and Sacramento. Well, just finished two in Rosemont and Sacramento. Both of them had multiple offers on them. And in a multiple offer situation, 30-day escrow is a serious disadvantage.
Sure. And Rich, you bring up a good point there in terms of shortening the timeline. So the key timeline, I think, was what sellers and listing agents worry about is loan contingency. So even though you said, it could take 17 days, when you're pre-approved with the property address to be determined, we can do loan contingency 7 days. There's or sometimes less. It's just a matter of now we have the appraisal contingency is the only piece that's missing out of that. And that gives sellers and listing agents a lot of comfort, even if it's a 30-day escrow. They don't want to wait till 17 days to remove these contingencies in a competitive situation. So, and if you are going up against the same price, or maybe you're a few bucks lower than another offer, but they're not willing to shorten loan contingencies, in my opinion, and we've seen it more often than not, you're in the driver's seat and you may still win that offer and be selected and go into contract.
Yeah, absolutely. It's a great point. From the listing side, when I'm sitting as the listing agent, of course, I'm always looking for cash. That's going to be the gold standard. That's going to be the safest. Someone has a loan, I'm looking for someone with a 30-year fixed conventional loan, hopefully with 20% or more down, who's gone all the way through pre-approval, property address to be determined, who's given me short timelines. And it's just a signal of strength. It's a signal of strength of the buyer, right? They've done all of their homework. They can move quickly because they already have their ducks in a row. Versus very often we'll get a call from somebody who says, I just saw my dream home on the internet. I want to buy it. Now, Dave is doing a pre-approval while I'm running out to meet these people at the house. We can only issue a pre-qual letter because they didn't do their due diligence up front. And we're kind of, begging, scrambling, and Dave and I are doing our best pitch to that listing agent to try to make the case that this is a solid buyer and we'll get all that due diligence done as quickly as possible. And that is the least strong position you could be in when trying to come in and write an offer, especially if there's competitive offers.
And Rich, is it fair to say you've been in that situation a fair amount of times?
Yeah. In 20
People
years,
get excited.
a lot of times.
Yeah.
We just did one together where someone did that exact thing and had a house to sell on the back end, and they ended up putting themselves in a decreased bargaining position on both their purchase and their sale because they didn't just slow down and do the due diligence up front. That's their choice. Dave and I will let you make whatever choices you want. But all things being equal, if you can do this up front, get all the way pre-approved property address to be determined, then you're in the best place you can to bargain and get the best value for your money in a real estate transaction.
Yeah. And again, that doesn't take much time. We're talking a couple days, typically at the most. And so, I kind of walk through the pre-approval to be determined. It's just as a, loan professional that's been in the business a long time, I look at pay stubs or tax returns, and I can do 95% of the qualification myself or more. It's just I need to get that final verification from an underwriter because they're the ones that signs off, not me. So
yeah. And if you are self-employed, if you do own a corporation, if you are taking income in some non-traditional or tax advantaged ways, try to contact us sooner, because there's going to be a certain subset of lenders that just don't play in that space. And so we got to go to other lenders, and it could take a couple of days more for us to source the best solution for somebody with a more complex income or tax situation. So if you know who you are, if you're that person, try to get us involved just a little bit earlier in the process, so we can help you get to the same place we're getting these other buyers to. It just might take us an extra few days.
Yeah. And you bring up a really good point, Rich, here when you're talking about income and types of income that we're looking at. Here we are early November. If you're self-employed and we need maybe a 2-year self-employment history or 2 years tax returns, I run into this all the time. Your income last year wasn't amazing, or in 2023. Well, we're in November 2024, so you might qualify for a house that's $100,000 below what you want and what you are comfortable with today. But we may make the recommendation, hey, you're on pace to make this income, file your taxes in early January. We could use those 2024 tax returns, and now you qualify for that house you're really looking for. So instead of trying to force the issue, let's talk through, what do you need to do? What does your income need to look like on when you file your 2024? And now we're in a whole different bracket of properties. So those are the things that, part of the conversation that we have.
Yeah. And this especially plays in, in the case of divorce. Unfortunately, in real estate, we deal with a lot of divorce sales or purchases. And a lot of times self-employed people are not married to other self-employed people. They're married to people with traditional income. And so it's easier. It's just easier for Dave and I to use the traditional income partner. So often we're not really messing with the self-employed person's income or situation that much in the first time we sold them a house. Then they get a divorce and the self-employed person has to qualify all on their own. And again, especially coming out of a slightly recessionary economy we've had, where some people have had a bad couple of years and now we're having some better years, we may have to encourage someone to get through that next tax cycle before they can repurchase a home post-divorce. We deal with that a lot. So it's great advice, especially this time of year, to chat through your situation with the lender, because there could be a significant advantage to you qualification wise and what you can buy if you just get through that next tax cycle.
Yeah. And to that point, again, it's never too soon to get pre-qualified. And more often than not, I've worked with folks that didn't qualify, today or in the next 3 to 6 months, but we have a conversation. What is it that you need to do? There could be, we could talk here through unlimited scenarios of why people don't qualify now, but I will always advise you on what you need to do to be pre-approved or pre-qualified, and have a pretty good understanding of how long that will take. Some examples that we just talked about is your income's going to increase when you file your taxes, or, maybe there was a credit issue that's going to fall off in 2 months and it just behooves you to wait. Divorce, maybe you're getting married, maybe, you're graduating from college, or whatever that may be. There's all unlimited scenarios, but we will talk through and advise, if you don't qualify currently, what do you need to do to be able to pre-qualify, and just stay in regular contact as well. Give people a list of check boxes. Then really the ball's in your court. And me and Rich have seen this a lot. If I can't make people do certain things, I can make some recommendations, follow up on a regular basis. But then it's really up to you to do some things. And sometimes they're pretty basic and pretty straightforward.
Yeah, we dealt with a lot of that coming out of the Great Recession with so many foreclosures and short sales. People would have
Mhm.
these seasoning dates where those would essentially fall off of their credit report and they'd be able to get a loan without those on. Now, in a lot of cases, you could get certain loan products with them still on, but if you were close to your seasoning date where it falls off, pricing or access to better programs gets significantly better. So just telling someone to wait 3 or 4 months in the few years after that, the Great Recession, made a huge impact on people's lives. And if you're not working with a professional who understands that landscape, and sure, I can pre-qual you today and here's what you get, but hey, based on this short sale or this foreclosure or this bankruptcy, and your seasoning date here, if we wait a few months, things get a lot, I mean, in some cases dramatically better. And that's why it's important to be working with someone who's been in this business a long time, who'd rather wait 4 months for a paycheck so you get a better deal rather than get you right out in the car right now because we can. Just because we
100%.
can doesn't mean we should.
100%. And that's a really good point, Rich. And I'll never encourage someone to do something before it's time or it doesn't make sense. So, I don't
Yeah.
want to disparage any other industry, but, sometimes, when someone's got someone with a pulse and they're in the door, they're going to do everything to not let them walk out the door. That's not us. So,
Yeah.
uh, we want to
Yep.
make sure that once you buy that home, and I say this to everyone, a lot of times people are afraid to make that first step, especially if you haven't owned a home before. It seems like, oh my gosh, this is a big first step. It's a little bit overwhelming, which it is. I've been a first time home buyer before. I remember what that feels like. The amazing thing is once you make that first payment, and then the second mortgage bill comes in the mail, you're going on with your life. You're not even thinking about it. So this whole pre-qualifying process seems overwhelming. You only go through it when you're in the process of buying a home. It's really not that big of a deal. And, we meet some great people doing this and maintain, relationships that oftentimes are beyond just the business relationship.
Yeah, 100%. I always liken it to my former career. I was a raft guide for over a decade. And on some of the easier rivers, you could hop in a boat and you can crash your way down. You'll probably be alive at the bottom, but it'll have been a rough and harrowing experience. And people try to approach real estate and kind of crash their way through on their own for lots of reasons, not wanting to reach out to people yet or earlier, not wanting to feel sales pressure or whatever that reason is. But the earlier you get a trusted guide in the process, the much smoother that is and the better your outcomes are. Um, let's cycle back to the nuts and bolts here just
Yeah.
to bring this in. So we talked about first calls to pre-qual. It's just back of the napkin kind of stuff. Dave can get most of what he needs there. And he's going to collect a little financial information, a bank statement, a pay stub, that sort of thing, and run a credit report. That's the pre-approval stage. And by the end of that, he's going to know sort of airtight whether you're a go or not for buying a house right now. And then just to make sure all the T's are crossed and I's are dotted, he runs that through underwriting, gets a final sign off for that. And then you are fully pre-approved, property address to be determined. But what if I don't qualify right now? What do we do then? I get to some stage of the process and we hit a fatal flaw that we can't fix right now. I didn't qualify. What's the next step from there, Dave?
Well, it's really just understanding what that is and just making sound recommendations. So, it could be a number of things. It could be, you get through this process and there could be a job loss. There could be
Yeah.
something that shows up on your credit that you had no control over. Even though we've ran your credit and we don't see anything, then something pops up. Divorce situation. We've seen, so many different scenarios and situations. So we are the best prepared we can. But if something pops up that causes you to not pre-approve, it's never perpetual. There's always something or something we could do or an amount of time that it's going to take to solve that issue. So, Rich talked about the Great Recession and foreclosures and, some people, some REO sales, some short sales. There are different things or bankruptcies. There's always things that people go through, but there's always going to be light at the end of the tunnel. And whether that's 3 months, 6 months, 1 year, 2 years, 4 years, whatever that situation is, we just plan for that, plan accordingly, and just, try to stay on the tracks.
Yeah, and we are not breaking up with you if you can't buy a house. So if we find that flaw, then Dave is going to tell you what you need to do next, how you fix that flaw, what the likely timeline is. And he's going to tell you, go do this, and then come back to me. If you're having trouble with it, feel free to give me a call. Once you've got us involved, we are an advisor to help you until the point that you can buy a house or decide you don't want to. So we're always here. We're always available. So it's not, I think some people get a little nervous to go through the pre-qualification process because it might be embarrassing if I don't qualify. What if I can't do it? Or this guy sees that I'm broke. I think we all want to project a stronger financial position than we're in. I think anybody at all income levels always feels a little insecure about that, whatever position they're in. And it's nothing like that. It's simply, you can do it or you can't. And if you can't, we're going to get you to where you need to go so you can do it. And we're a team to help you in that process.
Yep. That's well said, Rich. Yep. No judging, just, black and white. Let's figure this out and share a roadmap of what you need to do. Or if you're ready now, then, and you feel comfortable with it, then we'll just proceed with those next steps.
All right. Well, let's wrap this up with a discussion around what I base my home search on, whether I base my home search on my qualification or my comfort. We kind of danced around this a little earlier in the podcast, but I want to put a fine point on this for people because it's really important. So you go to Dave and he's going to tell you, you qualify for this. And most often, actually, what's funny about this is most people come to me worried that they won't qualify. And in most cases, people actually qualify for more home than they should buy or want to buy. So you might come out of a conversation with Dave that says, I can buy up to $750,000. But when he tells you the payment on $750,000, that's not within your comfort zone. That's going to put a real strain on your family monthly. So, and I'll let Dave weigh in on his opinion on this, but I encourage my clients, once you've gotten that pre-qual done, the range you're qualified in, tell Dave how much you actually want to pay. What's the maximum you're comfortable paying? What's the minimum you'll need to pay to get the home you've told us you want to get, and make that your actual range. He can reverse engineer a house price from what you actually want to pay. And then he can tell me, yeah, Rich, they qualify for 750, but they're really going to be more comfortable if you keep it 650 or below. Because here's the thing. If I take you to a $750,000 house that you can buy, even though the $650,000 house would be better for you, there's a 0% chance that you will buy the $650,000 house. The 750 will be way nicer. You will convince yourself, or one partner or the other will convince them to make a bad financial decision. So we never want to go into homes that are more expensive than you want to pay for.
Yeah, that's a really good point, Rich. And some of the things that we talk about, there's two really main factors that come into when you talk about what someone's comfort level is oftentimes someone will tell me, I'll give you an example. Well, my comfort level is 2,000. By the time I get through the pre-qual process, I find out their comfort level is really 3,000 a month. So just part of that conversation, because everyone, and that's usually some range in the what people pay for rent. That's usually somewhere in the neighborhood of what they would pay. What's your alternative if you don't buy, is to continue to rent. If you're in a rent situation, or maybe you're living at home or living somewhere where you're rent free and you're saving some money. So the other part of that is lifestyle. So does buying a home really affect your lifestyle? And everybody's got different lifestyles. Some people, like to buy that Toyota 4-wheel drive, fix it up and spend thousands of dollars, going off-roading, and things are breaking and they're fixing it. And that's what you love. That's what your passion. You're not willing to sacrifice that. So is lifestyle. And are you willing to sacrifice some of that in the short term if that means you're going to be able to qualify for that house that you really, really want, and you can qualify for, but you're willing to sacrifice for a short amount of time? And the other part of that is what kind of income trajectory you're on. There's a lot of folks that we work with that are going to get already known pay increases. Maybe you work for the state, maybe you're a teacher. The one thing about our business that's, I think, amazing is if you get a 30-year fixed mortgage, and let's just say your payment is $3,000 a month with taxes and insurance, that really doesn't raise much ever. I mean, we know the principal and interest portion is never going to raise. Sometimes your taxes and your insurance could go up incrementally. And, let's just say that's $100 a year or whatever that is. More often than not, when I talk to people, their income will increase, and they know what their income's going to increase. Some people go up 3%, 5%, 10% a year. So in 5 years, if your pay went up 5% a year for 5 years, you have, and it's over 25% by the time you extrapolate it out, but you will have increased your pay by over 25%. Your mortgage payment may have gone up 3% over those 5 years. So that's something, that's when I talk about your comfort level. What are you comfortable for? And does that mean, is that a short-term uncomfortable or is it a long-term uncomfortable? So those are the types of conversations we have, and making sure that because when we formally approve you, it's based on your debt to income ratio for the most part. And people could qualify sometimes up to 55% of their total debt to income ratio, which is a lot going towards all your expenses, including your housing expense. And we look at that and say, is that a short-term thing? And sometimes what affects that is you have an auto loan that is $700 a month, but you only have 14 months left on it. So what can you do? So you're going to lose that $700. Your car's going to last you another 5 years or whatever. So those are the types of things. Nothing's in a vacuum. We look at all these types of things and say, okay, is it comfortable today, or why is it uncomfortable? What do you want to do? And then oftentimes when Rich gets you out and you're looking at houses, and Rich, I know, like you mentioned, in different neighborhoods, there's different, up in, El Dorado Hills, 100,000 might not be significantly different. So in Placerville, 100,000 might be significantly different in the type of house that you buy. So only you can make those decisions, but we're never going to show you or have Rich show you something that is out of your comfort zone. And that's why it's really important to do that right away, that pre-qual and that pre-approval process.
Yeah, absolutely. And I think you made a good point there that I think gets lost a lot in all the talk around interest rates or higher interest rates when it comes to a mortgage. But Warren Buffett always talks about how he loves the 30-year fixed mortgage because it's a one-way beneficiary contract. You are locked in. The bank doesn't make any more off of you, but you can always go down from there. You know your maximum risk, but it can always get better from there with refinancing in the future. And so as long as that fixed cost is something you can afford now, and like Dave says, you're on sort of an ascendant income path, it becomes a real stable bet for you in your, in terms of a borrowing instrument. And again, this depends on what end of the life spectrum you're in. If you're a young, upwardly mobile professional, that's not a problem. And if you're on the verge of retiring, we're going to give you different advice in regards to, pushing price range or where your comfort zone is. And that's where just getting high quality professional advice as soon as you can really comes into play. So I hope this is giving you guys a good primer on the pre-qualification process. Again, the first step is only going to take you 15 minutes on the phone. The second step, pre-approval, maybe a couple of days, and fully pre-approved underwriting to be determined. Even if we have a weekend in there, maybe 5 to 7 days all up. It's not a hard process, but it is probably the most important thing, the most important step you'll take on your home buying journey to determine a successful outcome is getting this done and getting a lender involved as early in the process as you can. That's why people in Dave's position are so valuable to people in my position as a realtor, because having someone who can give our clients high quality advice that we can trust is crucial to getting the job done for our buyers. So Dave, thanks for taking the time today to kind of walk everyone through this. As always, thanks for watching, guys. Thanks for getting to the end with us, and we'll see you on the next one.